Options is a great way to make passive income, but they're not 100% passive. We still have to manage them. So I'm going to show you exactly how I manage mine in this is my actual portfolio using my real money, real options, and this will be a real life example of what you can follow with your own options trading. You can follow along to see a real example of how I do this so you can learn and maybe do something like this yourself. So I want to talk about which options I want to manage, how I identify those, exactly the process of how to close them out, and also talk about buying power. And then I'll compare before and after on if I made any profit or not on these things. So let's talk about buying power. Let's pretend that we opened an option spread and received like a call credit spread and received $300 for it. And then we decide later, hey, I want to close this, but we'd have to pay $150 to close it. And you can see down here, buying power is only like 107. So you might be thinking, oh wait, I don't have enough buying power to actually close this out. I'm stuck. But don't worry, that buying power already takes into consideration that money to close out your position for the most part. So Robinhood, their risk management system with options, already sets aside some collateral, so then you have enough money to get out of a deal to buy it back and close out option spreads. So that buying power already takes that into consideration, which is really nice because you might be thinking, oh, I don't have enough buying power to close out all these deals. No, it's fine. They already set aside some collateral and you're taken care of already. So that's on the buying power aspect. So the before numbers, buying power right now is about 108. And we have a little card here saying I have several options expiring this week. And I'm going to close some of these out. I want to manage them. I want to take the profit now and not hold these all the way to expiration because some of these are expiring tomorrow. So I would like to close these, take the profit now, and get out of the deal, free up that collateral, and then I can do this all again and make some iron condors and call credit spreads and receive some income for doing that. So if we scroll down, we can click on options. So this chart you see here, negative $354, that is what my net profit loss would be on if I closed out all my options right this second. But I'm not going to do that because some of these options are puts and calls and I'm just going to leave them as they are. You can see there what's strange. I don't know what this is. Okay, so that's that price. And if you scroll down, it changes to a bigger negative number. I don't know what that is. I don't know if it's a glitch. Let me know in the comments if you ever figure that out. Not sure what that is. A little concerning. But anyway, if you click on realized profit and loss, just looking at this past week, I've made $97 in profit. And so that's our before number. So we'll keep that in mind. And we'll see what it looks like after we close some of these things out. So to identify which ones we want to close, you can scroll down to positions, this little setting thing, and it's already sorted by time to expiration with the arrow pointing up, which means that the soonest ones will be at the top. Okay, so today is the 18th, and you can see right here, 11/19, we have something expiring tomorrow, a couple days from now. So we want to take care of those, and if they're profitable, which you can see that they are because these are set to total percent change, these are profitable, and I'm happy with all those percentages. They're all in the green. So, and with these expiring so soon, we might as well take the money and run, right? So we'll start with the first one. Let's start with these 3 iron condors on the SPY. And you can see if you hold down and swipe left or right, there's a quick way to manage these. We want to close them, right? So we're going to swipe left to close. And see that bid ask price. The bid is that bid price from our perspective right now would be like us saying the lowest I'm willing to pay to close these would be $20. And the ask price from our perspective, maybe we're thinking, well, the highest I'll go to pay to close these is like $25. But you'll notice that between that spread, the midpoint is probably the best bet to put in a price. But the higher you go to the ask, the more likely it is that it'll execute and it'll close these. Notice how there's 0 contracts available. That's because I already put in a limit order to close this. So if you notice that, if that's in your case, you'd have to actually go back and replace your order, which is what we'll do right now. So we got to replace this. We'll tap on it instead of sliding and scroll down. We'll see, yep, we already have something placed. We'll have to replace it. So we'll tap on that and replace order. Notice my limit price is $23. No one's biting. We'll have to do a little bit better than that to actually close this. So let's replace it. Okay, we'll go a little higher towards the ask. We'll see if it'll get filled. Click review, swipe up, pending, placed, filled. There we go. Great, so we paid about $73 to close this. And I might be wondering, now, how are we making money if we're paying to close these things? Because when you open them, we received more money to open it. So we did make a net profit, so we're good there. Now, why not just hold all the way to expiration? Well, a couple reasons. One, a bird in the hand is worth 2 in the bush. You know, let's take the profit now while we know for certain that we are in a profit zone. And 2, it releases collateral, so we can have more money to enter into another deal. And as these things approach expiration date with options, you know, there's different factors that go into the price of the options. There's the underlying stock, that price, there's time, and there's also volatility. So all those things are going to influence the price, and things get crazier as they approach expiration date. So we might as well take the profit now when we have some certainty that we'll be profitable instead of squeezing out a few more dollars by waiting to close on expiration day or real close to closing time. So we'll click done, go back. All right, cool. Another one's coming up soon. Let's close these. Scroll down. Looks like I don't have anything put in there to close them. So we'll do that other method. We'll go back. We'll swipe left to close. We got 6 contracts. Let's try 0.19. And I like their Little indicator there, low fill likelihood, kind of warning us, hey, this isn't gonna fill. Well, okay, maybe we'll pay $20 to close it. Is that fine? Yeah, okay. We'll do that. So we'll pay $20. Total cost is $120. Release collateral 600. Swipe up. Pending, placed, and filled. And you'll notice you can put in whatever price you want. And if you're waiting and waiting, sometimes it takes about 5 minutes before something gets filled. Sometimes, like you see here, it gets filled pretty much right away. So you can go ahead and put in a price closer to the bid price, walk away, go get some coffee, come back 5 minutes later, and if it's still not filled, you could always replace the order and bump it up a penny, and then wait 5 minutes, come back. So in that way, you don't have to always go right at the ask price. You can just slowly bump it up a little bit closer to the ask price, see if it gets filled. If not, come back and replace the order. And then that way you're not spending more money than you need to close these. All right, got a QQQ credit spread. Very healthy profit of almost 30%. Swipe to close. And let's try in the mid price 13, low fill likelihood. Why don't we bump it up to 14? Great. Review. Swipe up. Pending, placed, filled. Wow, that was fast. All right. These puts and calls, I'm just going to leave them alone, because these are stocks I'm either selling calls on to receive some premium, or I'm selling some puts to get into the stock, so I'm going to leave those alone. We have another QQQ that I want to close. 0.14, low fill likelihood. Let's just try it. Swipe up. Pending, placed. Okay, so some time has passed, about 3 minutes, and even though it did say low likelihood of being filled at $14 and the highest ask was $15, it did fill. So sometimes you just gotta wait a few minutes and then it executes and closes it. If you want it closed right away, like it's a last minute to closing bell, go ahead, go with the ask price just to close it. Now you'll notice that I have some pending orders. Some of these are some credit spreads and iron condors I want to close. They aren't expiring tomorrow. They're all the way out in December, but I am picking to close these because these are profitable right now, and if I close them, I get to free up some collateral. So let's go ahead and close them. Since they're pending orders, I need to replace them. So just tap on them, replace order, and let's try 14. Review, swipe up. Pending, placed, done. Let's close this SPY. Replace order. This is kind of a big spread between the bid and ask. So we'll kind of play with those numbers here. 87, they might take that. Pending, placed, okay. And then what else we have? This SPY, we want to replace 0.28. Will they take it? Maybe 29. Maybe 30. Let's do 30. Pending, placed, filled. Go back. Okay, it's been a few minutes and no one's biting, so we need to replace these and get them closer to the ask price. So let's see if they'll take 15. Pending filled, awesome. Go back. We'll replace this. Awesome, so that's filled. Great, okay. Let's see here. So we'll go through our positions. Anything coming up soon? Yeah, there's QQQ. We can close that. Let's try 15. Filled. Sure, we'll close this too. Why not? .25. Pending, placed, filled. What else we got here? Oh, the iron condor is not looking too good. Yeah. QQQ, it's below our range. That's not good. So you can see right here, QQQ is at 599, 8 days to expiration. So if this went down in price, we get close to our max loss. And if it goes up by just a small percentage, we could make some profit. So we'll just leave that one alone. We got a week for the QQQ to recover. So we'll just leave that be. This credit spread is up. Let's take our profit. Okay, the 0.17 wasn't doing anything, so we'll try 0.18. Pending, and now it's filled. Awesome. All right, so that is all the positions I wanted to manage. Those QQQ iron condors, they're down right now. Hopefully the market will recover by the time those dates roll around, and then it'll be inside our profitable range. And once they do reach your profitable range, we can close them. So, looking at the final verdict between before and after, let's look at realized profit and loss. Remember before it was $97 profit, and now it's $181. So as you can see, this is a pretty easy way to make some passive income with a little bit of managing your positions. And we can see all those things we just did. Click X, back. And look at that, buying power has increased to about 1,730. And so that frees up some collateral where we can go ahead and do some more strategies like this, some income producing strategies with our options. So if you like this video, please give it a like and subscribe, and I'll see you next time.